Alright guys, so we're here with a long-awaited video. This is a spike catcher download for those that are in my Telegram only. And what I want to be able to do for you guys today is show you how to set it up here real quick. So I'm going to add all 4 indicators on real fast, and then I'm going to show you how I use it. So the first is the ADX trend. It's going to allow us to be able to see the cycle waves. Next is the MACD. It's going to give us signals. And next is the trend detector zone. It's going to act like an Ichimoku cloud. And then we have the zigzag support and resistance levels. So with the entire strategy now combined on the chart, what you guys have here is a full system that you can utilize to be able to get in and out of trades effectively and safely. So I'm going to go through it today with you guys for a few minutes here, show you some entries and exits, and even some divergence patterns. And as you guys learn how to spot these, you're going to become better traders and you're going to have more successful trades. So just starting right here from current price action, what do you guys see? So we do get the entry signal here, and we get our exit signal here. So you get the arrow as your entry, you get the circle as your exit. Now, you've got to keep in mind that this trade has some risk on it because you're trading against the ADX wave. Now, we know how to plot divergences. Those have had my consultation. So you see one caught right here with the MACD. See how the MACD turns bullish. So this is a safe area to take your trade. So just understand that this is your entry and exit, the arrow, the circle, the MACD going to the zero line after a divergence has been spotted. You also see it on the histogram here. Now, what is a divergence? A divergence is when the oscillator is doing the opposite price action. What do we also understand? That we get our level 1, level 2, level 3 setup. How many times have I taught this? When you start to recognize this, it'll be easy. Now, what we do is when we get spikes, when a spike finally happens where a spike is lower than the previous spike, we can draw a trend line connecting those spikes. Now, there wasn't a signal given here. It actually showed up here. This isn't a safe trade because the cloud here is now showing bearish momentum, and the entire green ADX wave, which is a direction movement index, is slow now. So you're basically just going to run into a trap. So although we use the trend lines as our entry, this happens to be a false breakout. Remember, you want to wait for a 3-level setup to take a more confident trade, right? Now, we draw our trend line from our next spike downward, connecting 2 spikes. Let me actually change this color so you guys can see the difference between our trend lines and divergence. So what we're looking for here, right, is the fact that now that we've connected 2 spikes and the trend line has been broken, this gives us an early entry, but we got to keep in mind MACD just created divergence, but it's still negative. So you want to take the safety trade, which is basically when the MACD shows you it's closing positive. Remember, you have this area of risk. So this trade is a safe trade on the breakout. And of course, you guys know what we do. We stack it up, guys, because I've taught you a strategy. Now I want you to combine it with what you've learned, right? So add on the awesome oscillator. Take the accelerator, pull it from your data folder, add it onto your oscillator window, and it'll give you the indicator plotted on itself. So now we have the AC and the AO, and you see that when the bars are the same color, those are your trades. So as you can see right here, we had a solid trade. Area of risk. However, the AO is trying to get back to the zero line. So when you see the bars go back, there's another trade. So as you guys get more familiar and you learn how to use this, you're going to start to recognize 3-level setups, and you're going to start to understand divergence patterns. So I don't want to leave you hanging. Let's cover another one. Scroll back a little bit. More importantly, you guys should be using higher time frame analysis to be finding these setups. So let's find it in a wave where you would take the setups, right? Because that's what we're looking for. We're looking to make money. So what you need to start recognizing is when price is moving in your favor or not in your favor. So let's connect the trend line from here to here. And we would look for a trade in here, right? So you guys would see that this arrow occurred. And you would think, oh, can I take this trade? All right, well, let's see where we're sitting at, and let's count the waves. Level 1. Let's plot level 2. And we don't really get a level 3 plotted. However, this trend line that acted as resistance now gets used as support here. So we count this here as a level 3 while understanding what? The MACD created divergence here. And on its histogram, we're also noticing that the selling pressure is getting weaker. It's even connected level 1, level 2, level 3. So if you guys see that again, level 1, level 2, level 3. So use your oscillators, use your indicators to also help you identify the levels that you can't see. So here's what I'm explaining to you now. After you can identify a level of divergence, plot another trend line. Well, actually, I know you guys would draw it from here to here, which is what gives us our trade here. So let me plot that one first, because I said connects the most 2 recent spikes. So then what you want to do is, I wouldn't plot a trend line horizontally, even though you can. So this would actually represent the breakout trade right here. That's not exactly the first trade I would expect you to try to trade with your trend line. What I'm saying is go from this most recent point, swing it out to here, and look what that gives you. That gives you your entry trade, which is right here. So I'll plot those lines on the arrow and the trend line break. So all this area is an area to safe scalp. Why? Because we've identified levels of divergence, which what creates this entire pattern. This entire pattern, look at this. It's this whole wave because of divergence. Okay? And I'm sure there was another divergence back here, which I'll get to in a minute, that I'm sure created this huge wave that plotted up as well. There's another one here. It's just really how you guys start to learn how to read it. And I don't want you guys just trying to draw them out of thin air. Try to identify 3 level setups, and then that'll make your waves more clear. For instance, let's zoom this in right here. So you see a 2-wave spike. What does this do? This creates level 1. This creates level 2. Now what happens though? This is a risky trade because you're entering into this entire area, which is bearish momentum. Now, you guys know how I trade. We're going to add on them yellow star dots. Don't get famous for that. So, what does it do exactly? It creates our triangle pattern, but it spikes. What do we notice now? Level 1, level 2, level 3, inside of our level 1, level 2 pattern. So level 2 to level 3 right here, right here. Level 2 to level 3, get my arrow. Level 3, right? That's when we can take this as our safety trade. And look what happens afterwards. I'm telling you guys, 3-wave setups work. Look, here's even a divergence on the AOAC. Boom. Okay, so if you guys are still struggling with how to identify divergences, part of it is you not waiting long enough to be able to recognize the pattern. The second part of it is not having a one-on-one consultation. Now, I know I preach that, and I know you guys are getting up to the point where you want to be able to afford it. Use what I'm teaching you. Use what you're learning on the Zoom calls, the VIP, everything I'm teaching you guys, and apply it over and over and over in back testing, okay? So that you can start to identify it, okay? So this is what's going to be able to help you. In this setup right here, this is a good idea. Check this out. You might ask, well, isn't there a level 1, level 2, level 3 in here? Okay, yeah, but you're trading against an entire downtrend wave completely confirmed by your ADX right here. This whole thing being red. There are no cycle waves going up. The MACD stays negative the whole time if you look at the signal line. So this entire wave right here, and I promise you, if we go to a higher time frame, 1 hour or 4 hour, I don't even have to tell you that this was going to be a downtrend on the higher time frame. So you guys should already know higher time frame analysis, direction trumps all of this. Doesn't matter how great your strategy or setup is unless you're trading it the right way. So I know you guys would be asking, hey, but I thought that this was a spike catching strategy. It is. You use it for what it's worth. It'll give you setups to also trade the bars. And what you pay attention to is when you get your red arrows, you understand that the more red arrows that add up as price moves up, it's going to create divergence. And that gives us our entries when we have the down arrows and we wait for our profit. So as you can see here, we get our first signal back here. Okay? But this isn't a significant spike. You don't have any level of divergence yet, so this is an early entry. I would wait through this, especially with the strong uptrend. Okay. Next, you're plotting this divergence line now, and you'd stop it right about here once you saw it. Now, what happens? We also get another spike. However, it's pretty weak, but we also get our first arrow that shows up, or second arrow. So now that we have 2 arrows set up, level 1, level 2, level 3 to the upside, right? Now you're going to be calculating your spike down, which is going to create this wave, the red ADX. So here's what you do. Plot a horizontal line from the first wave. Plot a horizontal line from the second wave, or arrow, same thing. Now, from the second wave to the third wave, which is where you're going to be entering, that's when you're going to be looking for your spike. However, the signal may or may not show up in time before the huge spike happens. So what this means is you need to be in the trade on the second arrow. Because why? You're trading 2 to 3, wave 2 to 3. This is 1 to 2, this is 2 to 3. So check this out. You can even use the green signal wave that came in here, understanding that this should be a breakout to the downside. It should be a divergence to the downside, right? So what we're looking to do is target our entries from here down to here. These become our take profit zones. Okay? So with what I'm trying to explain to you guys here, you use the signals where price is. We're in an uptrend, use the green signals, get out at the green circles, but understand that as the red arrows show up, this becomes your spike catcher. This becomes how you get ready to trade the spikes. Now, I taught you guys how to use the double MACD spike catcher strategy on TradingView. Combine that with this, you're going to be catching spikes all day. What do? We print money. So, all right, guys, I'm going to leave the download link for you guys at the bottom. Go ahead, check it out. I thank you guys for joining my VIP session. So enjoy the trial while it lasts. This is the value that I'm giving you guys. And for the lucky few, I might even drop it in the main chat on the Telegram as well. So catch you guys on the next.